Is Troy. I'm a senior account manager with AvaTrade. I'll be doing the session this afternoon. As we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. As we get going, keep in mind, as usual, all investments have risk. No one trade is guaranteed to profit. FX trading, trading in CFDs, spread betting, options trading, all of these sorts of investments, as well as many other types of investments, have a level of risk to them. And so keep in mind as you're putting together your trading plan, you probably want to focus some on your risk management aspect as well, whether you're using stop loss settings, taking a look at your trade sizes and calculating exposures, that sort of thing, things that we go over in the webinar as well. Also, you could make use of hedge trades to back up moves that you're making to help cover risk. We go over that concept on occasion as well. And those of you using our AvaTrade Go mobile app, which I highly recommend everyone checks out, it's really been an award-winning app. If you take a look at that, get it on your mobile devices. The AvaTrade Go mobile app has a special function on it called AvaProtect that helps you protect against risk for defined time periods on trades on gold and silver and FX pairings. So it's also a tool that you could utilize for your risk management purposes. Now, as we go over stuff in the webinar, keep in mind it's not meant to be financial advisement. We're coming from an educational perspective to hopefully improve upon your trading strategies and or help create a trading strategy if you're coming to us brand new, which is just fine. Those of you that haven't started trading yet and are just starting out, that's okay as well to attend this webinar, because we go through strategies that are good for those who are more advanced and also those who are just getting started. Now, today's focus being fundamental analysis. Just real quick, what is fundamental analysis? Basically, it's looking at what's happening in the news, what's happening on the economic announcement schedule, what's happening with headlines, breaking headlines. Some of this news we refer to as regular economic events because, like I alluded to, they're on an economic schedule. We know exactly what is being announced, exactly when, and which assets it might most likely affect. So there's that type of fundamental news, which we'll take a look at, that has occurred today. A lot out of the European Union, Great Britain, and we'll take a look at some currency pairings that are being affected by that. And then the other type of fundamental news is extraordinary economic news, which would be breaking headlines about things that you can't predict exactly when the headline will come or exactly what it will be about. So we'll look at some of that type of news today as well. At any time there could be an announcement that the U.S. reaches a stimulus deal, and then the markets might respond in a rapid fashion in response to that type of news. So that type of news, pretty much every day something breaks that maybe you didn't know for sure what the timing would be, and that moves the markets quite a bit. And so that's another type of fundamental news that strategy-wise we can work out within a trading strategy to be ready for that, whether that's with market moves or pending orders, to be ready for the unknown. Because what's known about the unknown is that there will be unknown news coming at some point. And so you work that into your strategy as well, both types of fundamental news. As we go along, please feel free to ask questions, point out information if you wish to share with others, and I'm happy to share information with others. So some main headlines that we can look at, fundamentally speaking. US dollar has been weakening, and the Chinese yuan has been gaining in strength. Okay, and there's some fundamental reasons behind that. China's been coming out of their lockdown, and their economy's been getting rolling quite a bit, and so the yuan strengthening seems to make sense. The dollar weakens. Well, if we're talking about more stimulus, in the US potentially being released, what does stimulus tend to do to the strength of a currency? If the government is printing more money and handing it out, right? And we're talking in the trillions being handed out, which already was done. What does that do to a strength of a currency if you have more of it? What does that do to the value of anything if you have so many of them? Any one becomes worth less, right? Not worthless, but worth less. Meaning, why are diamonds so valuable? Because they're rare, right? Things that are rare are more valuable. And so if you start printing more US dollars and handing them out to everybody, which is basically what stimulus does, mailing a $1,200 check to every person who qualifies in the US or something of that nature, certainly devalues the value of a currency doing something like that. So it makes sense if that the dollar has this push maybe to weaken. We see the dollar index is down over 1/4%. What's the dollar index? We can see that here. It's a mix of USD paired against different currencies, a basket of currency pairings, Euro USD, GBP USD, USD Swiss franc, etc. And so as a basket, the dollar's weakening compared to a group of other currencies. All right, so it's expected. It fits the headline. That's the power of fundamental news, right? And by the way, this is a good market snapshot. Why would the futures be green if stimulus is expected? The dollar weakens. We just explained that. Why would indices tend to want to rise if they expect a stimulus deal, at least a skinny one, as they're calling it, for the airlines, for specific segments of the economy? Why do the markets like that? Why do the markets like stimulus? I think it's an easy answer, right? Because it helps businesses do better. It helps the economy do better. And part of this stimulus package is to give money to businesses to be able to keep hiring and paying employees during the pandemic, during some of this quarantining that's still going on. So the markets view that positively, which is the inverse for the strength of the US dollar, which we understand why it might weaken with this type of news. And volatility's down. We see the fear index, the volatility index is down a little bit, not a lot. So it's not a day with huge momentum. The markets are slightly green, the sentiment is slightly positive, and fear is down slightly. The volatility index is down slightly. So that's the situation. Kind of a slow movement day so far on the charts. European stocks rise on solid retail earnings and commodity jump. Okay, so some good news out of the European Union, a little bit anyways, on retail earnings. And we're talking about specific companies. Pandora, Zalando, and a major drug maker out of the European Union expect good earnings, good numbers. And so that's helping lift European stocks. So there's kind of an overall moderate sentiment in the positive direction, not just in the US, but kind of global right now. And then commodities. If you are paying attention to what's happening in the Gulf of Mexico, where there's a lot of oil rigs, the US has shut down more offshore oil rigs and output than has happened in the last 15 years. So what happens to the price of oil if there's a fear of supply going down? If there's less supply, or at least the idea that people think there will be less supply, what tends to happen to the price of oil if supply goes down? Simple supply and demand tends to drive the price of oil up. Okay, and we've seen some of that. So this is the fundamental situation right now. If you're looking to trade on some of these things today, keep in mind, we talked about managing risk. And one way to manage risk, if you're going to trade on currency pairings, if you're going to trade on gold as a safe haven, or silver as another precious metal, you can use our AvaTrade Go mobile app, which is found under our trading platforms tab, AvaTrade Go. And the features on it are tremendous for helping you manage risk. We mentioned AvaProtect. So the only way to use AvaProtect is through the AvaTrade Go app or the AvaTrade Web Trader platform. And if the Web Trader platform doesn't show up when you log in from our main website, from avatrade.com, when you log in, if the Web Trader doesn't show up, ask your account manager to activate it on your account. Okay, the Web Trader platform is great, just like the app, for having these extra features, and they work right over top of your MT4 and MT5 accounts. So it doesn't matter that you can log in also through your MT4 mobile app or the downloaded MT4 platform or MT5 platform. You also can trade on those same accounts using the AvaGo mobile app and the Web Trader platform. And these platforms or platform and app allow you to use AvaProtect. You see this shield, you know it's available on the trade. AvaProtect allows you to protect for defined time periods against any and all losses that occur during those time periods that are protected. Okay, it's a great feature. It adds back losses at the end of the protection period if you're in losses, and then the trade can keep running. Or if you close it during the protected time period, any negative floatings added back to your account as well. If the trade finishes in profit, the profit's all yours. Okay, you just pay that upfront small premium for the right to have that protection on a trade. It's really a great feature. So also when you enter your stop loss, your take profit using the app, it automatically calculates before you ever place buy or sell, before you ever trade. It calculates your exposure for you and converts it to your account currency. It calculates your potential profit for you and converts it to your account currency. It shows right next to where you put in the stop loss and take profit. So it's a great tool for risk management, even for experienced traders, because it allows you to quickly manage your risk and understand the exposures and potential profits and all of that without having to manually calculate. Even if you know how to manually calculate, it's more efficient to use an app or the Web Trader platform like I'm showing you. Okay, so in general, as we go to the charts, the fundamental news situation that we've looked at, general positivity for the equities, for the stocks and indices right now, both in the European Union, US, and basically globally. Okay, now one thing we didn't look at here is, okay, we saw the dollar weakening, the equities rising, fear being down slightly, but what about the economic announcements? Okay, if we look at what came in today, not good for Great Britain. Look at all the red. This column is the actual number compared to the forecast, and if it comes in with red, that means the actual number was worse than expected. Okay, the expectation, the forecast is in this column. This column is what actually happened. The first column here is the last announcement for any particular announcement type. So the current numbers out of Great Britain, everything either at expectation or worse than expected, except for one announcement. That's a slew of bad news out of Great Britain. Okay, ranging from industrial production, manufacturing, GDP numbers, services sector, construction output, etc. Okay, in general, grim news. All right, and then if we look at the European numbers that came in out of Italy specifically, better than expected. Okay, so maybe a little more bullish on the euro and a little less bullish, or maybe bearish, I should say, on the pound. Okay, that's something to keep in mind as well. Out of the US, there haven't been any announcements, economic announcements yet. Later today, you'll have some major announcements out of Canada. So look for huge movement on the Canadian dollar as these numbers come through today. The employment change being the biggest announcement, and the unemployment rate. And then later out of the US, we've got the oil rig count. We already talked about the hurricane limiting the amount of production or offshore oil retrieval in the US, the amount of supply being limited because of the hurricane in a large fashion. And then throw on top of that that there are numbers coming in for number of rigs that are online or offline, that could be an impetus to spur further movement on oil. For example, if the rig count is way down in these numbers here, and we already know there's problems because of the hurricane, that could spur some momentum if those two things happen in alignment, okay? So it's something to keep in mind. All right, so let's go ahead. Let's get on my demo. You guys could be on your live accounts taking a look at some things. Let me get rid of some of these unneeded lines. Not sure why I have a vertical couple of lines there. Okay, so here's the GBPUSD. Okay, we understand the USD has reason to weaken. We also understand the pound has reason to weaken. We just saw some bad numbers for the Great Britain pound. Now we see the pound did give ground. So if you have two assets that both have reason to weaken, and now the pound already weakened and dropped over the last 2 hours against the USD, then maybe now you expect a bounce, because it's kind of like a weak horse against a weak horse. If one gets ahead, maybe you expect the other to catch up, okay? So with that sort of idea in mind, we see that there's a support level right here. Okay, this was resistance here, resistance and drop, resistance and drop, okay? And so we get over here, we see it got near that price and it bounced. So it's not surprising. So if we zoom in on this then, 5-minute candles, and we say, okay, here's a bit of a support level going back to days back, even weeks back. And so if then we say, okay, it broke it by a little and popped back up. So then you say, okay, I don't see any reason why the USD should keep strengthening right now. If the fundamentals kind of explain why the USD has been a bit weak today. So then you say, okay, let me do a market move maybe. Maybe I buy on the pound. And then I say, okay, if this breaks the first support level, then I'll get out. Otherwise, I expect it to bounce and challenge the first resistance level or second resistance level, depending how patient you want to be. So if I go to say 15-minute candles and I say, here's my relative support level here, where might be my relative resistance level? Let's say up here, okay? We could see just earlier today it was above this resistance level here, but here it was resistance once, resistance, and dropped. And the true stronger resistance is here. We see a cross, okay? If I slide this up a little bit, I can say there's the upper resistance, and it reached there today already, okay? Resistance and dropped, okay? Resistance is an area where the price hits and drops. So it hit and dropped off the resistance. It hit again today and dropped off the resistance. Now, if we have support down here somewhere, and let's cheat my support down a little to this low point here that it hit today. So now I say, okay, the low point of today and the high point of today. Now I've got something. So I'm risking about half to get below this support with my stop loss as my potential profit to get near the resistance that it already reached today. Since both currencies have a reason to kind of not be tremendously bullish, then maybe we expect it to range between the support and the resistance without breaking through, okay? And since technically speaking, I've got an advantageous entry point, meaning I'm closer to the support than I am the resistance, then if I buy, I can risk less than my potential profit without having to bank on anything really changing. Just if it ranges between today's high and low, I just took a better entry point for a buy, technically speaking, than if I was going to sell. Okay, so the fundamentals say this might range up and down, and the technicals say buy is the move then, because the support level is closer than the resistance. And so where would I put my stop loss? I would put it below the first area that I see as significant support. So if I modify this and I want to add a stop loss, I might put it down here, 1.2922, something like that. 1.2922. And then I look at take profit, and I would want to be before the resistance, so maybe 1.2966. That way it doesn't have to break the resistance for me to take my profit. I take it just before the resistance. Why? Because it's a day that looks like things could keep ranging around. Okay, so that's the setup maybe for a move on the GBPUSD. Some might say, well, why not be more patient? Why not wait? Maybe the pound will come down to this support level and then you can buy. And absolutely, this is up to each individual trader's preference. You could put a pending order down here, a buy limit pending order, buys from a lower point, and you could say, I want to buy from 1.2926 if it comes down. And I'll show you how to do that. Pending order. And by the way, the AvaTrade Go mobile app and the web trader platform make pending orders much easier too, because to buy from a lower point, I have to, on the MT4 or MT5, I have to know that that's a buy limit. Buy limit buys from a lower point. The app, you just tell it where you want it to buy from, it makes it a buy limit automatically. So on the MT4 platform, it's an extra step. You have to pick buy limit, then put the lower price to buy from, which in our example could be 1.2926. Okay, so I'll re-enter if it drops. Okay, now that's a better entry point. And my stop loss to get below the support doesn't have to be as far away. And so the ratio of my potential profit up to this resistance compared to my risk becomes much less by waiting and doing a pending order, right? Now, what's the disadvantage of the pending order? What if it rises now? Because indeed, it already bounced. Maybe it's just bouncing all the way back up. So if you only put the pending order, you might not get in on the trade at all. If it just keeps rising towards the resistance, okay, if it follows this range up and down. So sometimes I like to take the market move and also understand that, hey, it could pull down before it goes up. So then prepare the pending order too for an even better entry point if you expect an upward movement, okay? And so my stop loss on this one, if it's down here at 1.2922 or somewhere thereabouts, maybe I want it to be a little below that in case it has a little spike before rising. And so if my stop loss is 1.2921, I can go and add that on my pending order as well. Stop loss 1.2921. And my take profit could also be up here around 1.2966. Okay, so now I have the opportunity for an even better risk reward ratio if it happens to test this support level before rising, right? We hope rising if we're entering on these, right? Again, no guarantee, but the whole idea is we're managing risk, we're lining up the fundamentals, we're going after what we believe in the most. And if by the fundamentals you believe in the opposite, then by all means, you'd be trading the opposite, right? So let's then take a look at something else like crude oil. We talked about a reason why crude oil could be bullish today. Okay, hurricane in the Gulf of Mexico, oil rigs being affected, having to shut down production, and this has happened several times recently with hurricanes going through the Gulf of Mexico. So potentially it could really be having an effect on supply. Now, I see an opportunistic movement here because after initially rising today, oil is dropping towards a support level. Okay, this level here, let me get rid of this line. This level that I drew here for crude oil was resistance here and then broke through and became support, support here, support again, and held. So now as this is dropping, if it gets to this spot, it very well could bounce back up, especially if there's reason today for oil not to break support levels. If fundamentally speaking, there's a worry about oil supply because of the hurricane, then you might expect this support level maybe to hold. And if that's the case, it's pretty darn close to the support level now. So in that case, fundamentally speaking, it might make sense to buy on oil, right? And then you say, okay, how do I manage my risk? if truly oil should be bullish today and not break support levels, then maybe you're safe to put your stop loss below this support level, because if it breaks that support, then maybe something changed fundamentally that we don't know about. And that might be a spot that it could make sense to cut off the risk, to get out. Okay, so stop loss on the crude oil move could be just below that support, which would be down around what, 40.45. And your potential profit, if it just goes to the high that it reached recently, if it gets up to 41.4, let's say, then that could be a spot that you could scalp a nice profit out of the market, a short-term move. So the risk here is about half or a third of the potential profit. Let's say about half, okay, a little less than half maybe, of the potential profit. Risk, potential reward, okay? And we know we got in a little early. We understand the support levels down here. It was the same with the move on the pound. We understood it was above the support. So the fact it could push down before potentially bouncing up further, that's an expectation that that probably could happen. The idea is you're willing to risk a certain amount and get in at a spot that makes sense, close to the support, with a larger potential profit and a smaller risk. So entry points don't always have to be perfect. You just need to be patient if the entry point isn't perfect, so that you can wait and see if you're right about the overall picture that you expect. You know, if you're going to get afraid and close the trade because you're down by a little bit, then maybe you have to wait and be more perfect with your entry point, right? It's all up to your style of trading. Some might put a pending order just exactly on the support level and say, that's the only spot I want to enter on my buy. Well, okay, then that's a different style, right? Sometimes you never get in then, because it doesn't always test the support all the way down to the support. So you have to take the good with the bad sometimes, with getting in on opportunities a little earlier so you don't miss them, but also understanding that then exposes the risk just a little bit more as well. Okay. All right. So these are moves that fundamentally make sense today. That crude oil could bounce back up, and technically speaking, we got a nice entry point because it pulled down. If you expect oil to go up, then it's nice to buy from a low point. And the same with the GBPUSD. If you think both of them have reason to be weak today, and the pound just dropped a bunch, which it had, then maybe that's a spot that makes sense to get in to buy. Okay, so that's what we did. So these are fundamental moves with technical risk management that makes it so we're not risking so much. And the potential profit, if we're right on 1 out of 2 of these moves, we could still have an overall profit. Okay, so that's how you can profit and not even be better than 50%. Low risk, high reward type moves. And these are just scalp moves. They will hopefully close out, in the next few hours or so, or before the end of the day. All right, so let's take a look maybe at gold. I know a lot of folks have been interested in trading on gold a lot lately, and we see again gold climbing quite a bit. It reached 1917 or so, almost that level today, and it looks like it's trying to push up further. Why would it be pushing up? Well, there's some fear about the U.S. elections. If Biden wins the election, there's some fear that he's going to raise taxes on corporations and maybe cause a pullback in the economy, not just in the U.S., but maybe even a global effect. So gold has been bullish still. Seems the better Biden does in the debates, which he didn't do too bad in the last one, from what those who judge those things are saying. And maybe Trump was overly aggressive and turned some people off in that debate, then the markets get a little scared sometimes from that sort of result, because they like Trump's pro-growth, low-tax policies, and they fear the potential raise of taxes on corporations and businesses that could likely come from a Biden presidency. And so this is part of what's driving gold's movement. Now, also, we're looking at potential stimulus out of the U.S. If gold is paired against the USD, and the US dollar is weakening because of potential stimulus giving an excess of US dollars in the market, then gold can rise even easier. You've got a combination of fear and a weakening US dollar that allows gold to go up even easier. Okay, so that's something that we see happening with gold. Had we looked at it just a little while ago, it took a nice bounce off this little support area. Okay, let me get rid of some of these lines. We don't need this one. We don't need this one. We don't need this one. Here's our support level. These two lines here, basically. Okay, it was resistance, resistance, breakthrough, and support, and a bounce. So if we went back just about an hour and a half, these are 15-minute candles. So back about an hour, this was a great entry point to buy from, technically speaking, and also fundamentally, since we understand the USD is weakening today and gold has reason to climb. From this support level, once it hit, it bounced nicely in the direction you would expect. Okay, and so that was a bounce from around 1911 up to 1914 right now. So that's $3 per ounce. You know, a one lot position, $3 per ounce. That's a nice little gain. That's $300 profit in a short little move like that, bouncing off of a support level, and your stop loss could have been $1 down. So you could have already made 3 times what you risked to get below that support level with your stop loss. And so that's something that already occurred. It's the same idea we're doing with the move with the pound or the move with oil. Going in the direction, we expect the fundamental news to push it with proper technical entry points and risk management based on technical analysis. Okay, again, never a guarantee that any of these will win. But the idea is if you can win even 50% of the time with this type of setup, and if the fundamental news is on your side, hopefully you can do that even better than 50%, hopefully, then you really got something. You're profiting with very little risk. You don't have to double up. You don't have to, do risky types of maneuvers with trade sizes. You can just do a single trade size, and there we see gold climbing more. Likely gold will try to push up to this resistance level here. Okay, you see the resistance. If it breaks that resistance level, what do we have next? We have the next resistance level, if it breaks here, up at about 1920. Okay, so it looks like this could continue to climb for another $6 an ounce before it reaches a major resistance level. Okay, back on the 5-minute candles, we see this resistance, but there's another one slightly above that. Now, maybe you prepare pending orders to sell. It's an idea with gold. Up around 1916, you're reaching this resistance level, and we see on the 4-hour candles, there's another resistance up closer to this level, which is around 1921, 1920. So maybe you put a pending order to sell if gold hits 1920, right? Why? Because there's not huge news right now. The markets are kind of trending up and down. And so if you catch gold reaching this resistance level up here, which is around 1920, you see here resistance and resistance over here. It hit and dropped, hit and dropped. So if it gets near that resistance around 1920, a pending sell limit would then sell. Okay, that could be one idea. You also could put a pending order above that level. If it breaks above 1921 or 1921.50, then it broke that major resistance here, and maybe it climbs to the next level up here. Okay, so if we're looking at a 2 pending order setup for this strategy, so pending order to sell if the price hits, that's a sell limit. If the price hits 19, let's say 20, 1920, we could even maybe say, okay, you'd get in a little early, 1950, just before 1920. Okay, sell limit with the stop loss up at 1922 maybe, above that resistance that we just drew. 1922, let's say even 50 or 75, just to make sure we're past the resistance before we give up on a sell. And take profit on a sell could be at the first support level down, or could just be a ratio. You could say, okay, if I'm risking $3 or so, then I want to make $6 maybe. So I could say my take profit from 1919 would be 1913. 2-to-1 ratio, okay, or a little better. So that's waiting and being patient, that if it gets near the resistance, you sell. The major resistance on the 4-hour candles, this one and this one. And you see the green dotted line. If it hits right on that green dotted line just before that resistance, you're in. Your stop loss is just above that resistance. If it breaks through it, then you give up. Small risk, larger potential return on the if it bounces down. Then the other idea is a buy stop, meaning what also would you do if it broke the resistance and hit your stop loss on the sell? Well, then it's got a lot of room to run before it gets to the next major resistance level. So a buy stop pending order buys from a higher point. Again, with the AvaGo app and the web trader platform, you could just put buy from for each of these, and you wouldn't have to tell it buy limit and buy stop. So at price higher than the current price, then that's, buying from a higher price instead of selling from a higher price. So buy the sell limit sells from a higher price, the buy stop buys from a higher price. And again, you don't have to worry about that confusion if you use the app. You just say buy from or sell from, or the web trader platform. Now, so if it hits 1923, it certainly broke past this resistance, right? So at price 1923, where would my take profit be? The next resistance is way up here. So maybe 1934, just before that resistance. Now that's a great risk reward, right? Because I only have to risk to get back down below the broken support or broken resistance. If it reverses, I would give up on it if it drops back below what should be support at that point. So 19, let's say 19. So risking $4 down, but potential profit of $11 per ounce up. Now that's a great technical move, right? If it breaks a major resistance, that means there must be momentum. And usually when there's that much momentum to break a major resistance, then you see that it could keep running to the next resistance level. So here, if it breaks through and triggers the buy stop, we can make $11 per ounce, risking only about $3 or $3.50, right? And if it doesn't break the resistance but tests it, we're in on the sell anyways. We can make it on a bounce down. And likely, you could win on both of these. Meaning, if it hits the resistance, even if it's going to break it, usually at a major resistance level, before it breaks it, it pulls back at least temporarily, before then challenging it again and potentially breaking through. So we could win on the buy limit on a temporary pullback. Then it could go up and break through, and we could trigger our buy stop and win. And I said buy limit, I should say sell limit. We could win on the sell limit if it challenges the resistance up just a little bit higher on the price of gold and temporarily drops, win on the sell limit, then it could go up and break through and trigger the buy stop. Okay, so I think that's a great technical setup, especially for what's happening fundamentally right now in the markets with the USD weakening and also some fear still being on the market somewhat. Okay, so we could see some nice bouncing around here with gold. I think we'll stop here. We've covered some different sectors of assets with indices and commodities and currencies. Any questions on anything before we end things here? Okay, everybody, thank you for attending. I think you'll get some nice ranging movements and eventually potentially some breakthroughs. And the assets we looked at, as well as other assets, I think have some great opportunities today. So good luck with your trading. I wish you all the profits in the world. Hopefully you make some nice profits. And just be careful going into the weekend what you carry through the weekend. You might look to close some trades off before the market closes, so you don't have to worry about gaps through the weekend. You're welcome, Abby. Azam, I see a lot of fear coming into the markets between now and the U.S. elections. Good question. Azam is asking, how do I see the markets leading up to the U.S. elections? Listen, the Wall Street types are very fearful of what will happen with tax rates and the markets if Biden wins. This is it's a known fact. Biden said he will raise taxes on corporations. There's some estimates of in total 4 trillion maybe in tax increases if he wins and the Democrats gain control of the Senate. They already have control of the House of Representatives. They'd have free reign to bring in whatever high tax policies they want. And there's a lot of fear about that. So the more you see the polls showing Biden in the lead, and the more people think that he really might win the presidency, you might see more and more reason for markets to have fear and to potentially pull back. So be prepared for that potential possibility leading into the elections. And the opposite, if all of a sudden Biden trips up and has more flubs with his speaking and all the problems he's had in that regard, and if the polls tighten and look like Trump is more likely to win, you could see the markets hit new highs once again. So it'll be interesting to watch, and I think quite predictable that there will be big swings that could potentially happen in these markets. Okay. All right. Thank you, everybody. Thank you for the participation, the questions, and the comments. And have a good weekend. Bye for now.